Hello, my name is Marlon Chantilly, and today I'm going to be discussing the impact of artificial intelligence in the accounting profession and the challenges and opportunities that will arise out of that. The first slide I wanted to look at is application and opinion. And this is a figure from Thomson Reuters 2024. And the question is asked, can and should Gen AI be applied to tax and accounting work? Um, and the first question is, can Gen AI be applied to your work or essentially any AI? And 73% said yes, 21% said don't know, and 5% said no. Second question is, should Gen AI be applied to your work? 52% said yes, 18% said no, and 30% said don't know. And I think these figures represent a little bit of skepticism with AI. A lot of people do believe that it can be applied to your work with a figure such as 73% out of the 330 tax and accounting respondents. But the second question is a little bit more revealing, 52% saying yes, 30% saying don't know. And I think that's because there's a lot of unknowns about AI and what it's capable of and what it's able to achieve. Moving forward, we're going to be looking at the opportunities that AI allows for. And the first one I want to discuss is automation. I think automation is kind of the first thing people think of when they think of AI. There's a lot of things that AI can do, but specifically the biggest opportunity is automation and kind of getting rid of those simple tasks that take up a lot of time. Recently there's a study that 30% of an employee's overall time is actually used doing data entry or tasks that could have been handled by AI simply and instantaneously. There's a lot of things that could be automated, and on the next slide, I will show you a figure from McKinsey and Company that kind of explains what can be automated and what can't. And then looking at data analysis, there's a lot of data analysis capability with AI. One of the main issues with data analysis is human error. And data analysis is a key backbone of accounting. It's a due diligence, it's financials, it's everything accounting is. And with AI, we can have a more efficient process of data analysis. And we are also able to push that data analysis and that data into making decisions based off of it quicker, faster, and more efficient. And so from Krieger Analytics 2024, data-driven companies are 23 times more likely to acquire customers. They're 6 times as likely to retain customers and 19 times more likely to be profitable than their peers who do not leverage data analytics. And that's something that, middle market firms, especially, or, any firm that wants to be competitive in this environment can use to push forward and surge past their competition if they aren't using data analytics. Moving on to the next slide, we're going to be looking at the automation. And so what tasks fall into the category of automation? Well, pretty much everything in accounting can be at least somewhat integrated to automate. There's going to have to be specialization, of course. You're going to have different firms that want to do different things, whether it be like consulting, maybe you have a private equity firm or investment banking or whatever it is. And we're going to be able to customize the algorithms so that there is specialization within that market. And some of these processes can be automated, which the automation is really a key standpoint, because if you don't have to do the simple due diligence processing task almost, you have more time to actually be hands-on with your client, hands-on to be working on more important tasks, being more efficient and being more effective. Automation, it's also going to be cost efficient. You can somewhat get rid of some of those data processing jobs as an employer, but you're also going to be able to save money by allowing your employees to actually, go out and get more clients. Maybe they can handle more clients because 30% of their time isn't locked up with manual labor doing manual data entry. And then the efficiency is going to be much more quicker, a lot faster, and easier to input the data and get the results of the data. And so looking at this chart from McKinsey and Company, we can see that general accounting operations um, are essentially pretty much fully automatable. And looking at the chart, so you can see there is difficult to automate, somewhat automatable, highly automatable, and fully automatable. And so a lot of your simple tasks are really going to be automated. General accounting operations, cash disbursement, revenue management, all of these things are pretty easy to automate. They're very like data driven, data entry driven. Um, and then kind of looking at financial controlling and external reporting, it's kind of mixed, but it's very automatable. You can do a lot of things with it. Um, and that's going to free up a lot of time for those employees to um, focus on more important tasks. Looking at tax, it's again kind of in the margins. It's a majority that most half of their tasks are going to be automated. Um, so you probably will see firms cutting down on employment. Financial planning and analysis, very highly automatable. Um, Most of these are in the majority until you kind of get into more specialized items such as treasury. The first one we've had that isn't a majority automated. Risk management, not very automated at all. I mean, there are some tasks you can probably automate, such as data collection and data input, but for the most part, you can't really automate risk management. Same thing with audit and external relations, obviously. And then business development, you can't automate it whatsoever. Looking forward at data analysis, kind of like what was talked about, decision making faster, more efficient, and effective decision making, reducing the human error that occurs within data analysis, as these algorithms are written specifically to reduce human error and to catch discrepancies and mistakes. And again, more cost effective, less employees, one singular system, and the risk mitigation from having less human error is also more cost effective. Some of the challenges would be integration and data privacy. So integration question, how do we integrate? It's going to be interesting because there is a lot of questions whether we can integrate with a lot of the legacy or older data systems that people have. And it's very expensive. So we may see smaller firms not able to actually integrate AI because it is expensive. You got to hire an IT team to run and maintain AI as well. So there's a lot of things that go into integration and also the training and making sure you're up to standards. There's a lot that goes into the integration that has to be discussed, and it's something that has to be figured out with AI. And it's one of the main challenges and hurdles that AI is going to deal with moving into the accounting profession. Synchronization is also another thing. Same thing with the legacy and older systems. How do we synchronize them? Normally, everything's probably going to be on one platform. Everything has to be interconnected with AI in order for it to pull all of the data, all of the resources that it needs in order to make those decisions and to produce the results that it needs to produce. And challenges faced with integration kind of already went over, but the biggest issue is moving everything from one system to another and integrating those older systems. Next is data privacy. How does AI prevent data leaks, or how will it lead to data leaks? I think one of the issues is that pretty much everything with AI, it all has to be interconnected, it all has to be synchronized. And this is something referenced. The Equifax data breach exposed the confidential information of close to 147 million clients. Well, if all our systems are connected, then we are at a higher risk of data leaks. If we do get hacked, there's going to be a lot more sensitive information and confidential information that's released that wouldn't normally in a simple data attack. And it's going to be hard to mitigate since everything's interconnected, which kind of goes into the next point, risk mitigation. Is how do you stop that? Well, you have to hire another IT team or IT employees to make sure that that AI is up and running and that it's secure, and also preventing data leaks that may happen since everything is integrated now. And in conclusion, I believe that the integration of AI into accounting will be beneficial as it continues to grow and AI continues to advance. I think there's a lot more that we are going to be able to do with AI. I think everything's going to be at least somewhat easier. You can kind of eliminate some of the manual tasks that you have to do and kind of focus more on what's actually important, like getting FaceTime with clients, auditing, finding discrepancies, those kind of things. And then how do we navigate? I think that's another question that should be asked is how do we navigate AI in accounting? What are going to be the rules and regulations that are posed? How do we conform to them? And how are they going to change over the next year as AI continues to advance and grow? Well, thank you for listening to my presentation.